Hey there, welcome back to my channel, it's me the Mind Injector. In this video we are diving deep into SoFi technologies, and boy do we have some exciting news. SoFi is making big moves, aiming to transition into a full-fledged financial institution. And guess what's propelling this shift? Their involvement in the upcoming Instacart initial public offering. But as with any venture, there are risks, and if this IPO doesn't spark interest, it could spell trouble for SoFi stock. Stick around because we're breaking it all down. Before we dive into this video guys, I've got some exciting news for you. I want to introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. Plus, free premium courses to help you sharpen your investing skills. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So, sign up for a Moomoo brokerage account using the link in the description and start earning those free stocks. Now, let's jump into the main content of this video. SoFi is gearing up for one of its biggest challenges to date. They are one of the 20 banks underwriting the Instacart IPO, which could raise a jaw-dropping $616 million. This is a significant moment for SoFi, marking their first venture into traditional IPO underwriting. The stakes are high, as nailing this process means not just hefty fees, but also a significant boost to their reputation. Since its inception, SoFi has built a robust ecosystem of online loans, catering to college students and those seeking personal loans. They've even dipped their toes into launching special-purpose acquisition companies, which are vehicles for merging with businesses. But now, with IPO sentiment resurfacing, SoFi is looking to spread its wings. The vibe on Wall Street regarding SoFi stock in the context of the Instacart IPO is mostly optimistic. According to Morningstar analyst Michael Miller, this underwriting move is a critical step in SoFi's grand plan of becoming a full-service financial firm, not just your run-of-the-mill online student and personal loan provider. Roth MKM analyst Rohit Kulkarni chimes in, highlighting how SoFi's role emphasizes the growing importance of millennials as attractive customers for both companies. But hold on, it's not all smooth sailing. SoFi plays second fiddle to the lead underwriters, and it's not entirely clear why they were picked for this role. Miller raises a valid point, noting that it might all come down to what SoFi brought to the table. This is where the real test lies for SoFi stock. Let's get down to brass tacks. Being a secondary underwriter in a traditional IPO isn't a cakewalk. Underwriters buy significant chunks of a company's new shares, and if they can't resell them for more than they paid, it's bad news. SoFi is taking a gamble here, and it's far from risk-free. Now, let's talk about what investors should be keeping an eye on. Options flow data. Big institutions often make significant moves, and in this case, there's a notable acquisition of $7 put contracts set to expire in June 2024. This isn't just a coincidence, it's a sign of caution in the air. Before we dive deeper, let's pivot for a moment. Federal student loan repayments are back on the table, and guess who's poised to benefit? Yep, you got it. SoFi Technologies. They've made a name for themselves by helping people refinance their loans. But here's what sets them apart. They are not just another financial player. SoFi holds a national bank license, and they are serious about safety and security. They offer up to $2 million in FDIC insurance for qualifying checking and savings accounts, setting a new standard. Now, let's talk about SoFi's vision for the future. It all started with student loans, but they've evolved into a full-fledged financial services app, designed with young postgrads and professionals in mind. This all-digital platform recently added bank accounts with competitive interest rates and low fees. But here's the kicker. SoFi Invest, launched in 2019, offers a no-fee, fully digital experience accessible right from your smartphone. They've also been making waves in high-profile IPOs, acting as a retail distributor for companies like New Holdings, Rivian Automotive, and now Oddity Tech. And here's the plot twist. They are stepping into the underwriting game with Instacart. But there's always a flip side. Moving into investment banking is uncharted territory for SoFi. Sure, they aim to offer better products, but this is a different league. Investment banks usually underwrite stock distributions for institutional and high-wealth clients. SoFi's world is a bit different. This move could democratize a system that traditionally favored the wealthy and institutions. It's a development worth keeping a close eye on, especially if you're eyeing SoFi stock. Now, let's talk about IPO investing. It's tempting to think of quick riches, but it's not all sunshine and rainbows. IPOs can be a rollercoaster ride. Remember Visa, Tesla, and Airbnb. They are some of the success stories. But there is another side too. DoorDash, Nubank, and Rivian. They've seen ups and downs since their IPOs. The lesson here: IPOs can be highly speculative, and there's no guarantee of success. So, what about investing in the Instacart IPO through SoFi? It's an exciting prospect, but tread carefully. IPO investing is speculative, and it's essential to do your homework. Companies going public file an S1 with the SEC, and this is your treasure trove of information. Dive into it, understand the business, the financials, and make an informed decision. Remember, investing is about the long game, whether it's an IPO or not. Also, we must mention that 3 months ago, SoFi stock had a moderate buy consensus, with 6 strong buys, 5 holds, and 1 strong sell. Its current rating is 3.19. Only slightly better than the previous month's 3.07. The median price target is $9.86, offering less than 10% upside potential, while the high side target is 16%, representing nearly 78% growth. However, the lowest target is $3, indicating a potential loss of almost 67%. Institutional investors seem concerned about downside risk, so retail investors should exercise caution when considering SoFi stock. So, what's the verdict for SoFi stock? In my opinion, SoFi can navigate this new venture successfully without losing its core identity. This addition could be a game changer and lead to substantial growth. Despite its ups and downs this year, SoFi stock still boasts a 90% increase. Plus, with a price to sales ratio of 4.4, it might just be an opportunity waiting to be seized. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.